Many operators are too aggressive. We're going to dive into a few systems here and understand how to take day trading and make it simple. We don't need to be aggressive. We just need to have a structure and a system. Click the link in the description, then join us. There is a limited amount of space for the council. What you'll get from there is guidance on how to move throughout these digital assets and Bitcoin, especially things like day trading and accumulation. When we start to open the week from Sunday, Asia, Eastern, into Monday, of course, the various sessions, we finally get to a point in the week where it's time for the main trend. A lot of the founders that I speak to, operators, especially if they're in the trades, they're used to just using cash, but they're understanding that the world is changing and it's time to evolve into new angles, to digitize at least some of your assets and your money. What is the better way aside from Bitcoin? You guys let me know. I'm super curious to know your comments. So we're dealing with the week open right now, the US Open. Let's go into a few key areas to understand what this exact system is and why this structure is so important. Of course, you can follow me at the links in the description. We typically start the week on a Sunday night, New York time, with some type of move. Typically, before Asia, we get a false move. And you'll see here, the Asia move started around in the dead gap zone before the Asia market opened. We see a false move down into a day trade up. Now, this is already a bit of a difference in structure. Let's go over here and I'll show you as well what I saw for this week. And that's the move right there. That's likely the move right there. So this could in fact be the move that we're looking for right here. And we may have to double back as I explain why. That could be the move that we want. That's the reversal zone. US is typically the reversal zone. So if we grab these levels that you see on my chart right now, highlighted here for a stop loss, for take profits zone, we'll do at least 3-1. But I do have levels targeted below price down here where there are large orders. That is a huge way down, but let's just set that level for now. As we plug these numbers in, we'll come back to the chart and we'll see exactly why those levels are set. Now, it's not recommended that you just simply set one level and walk away. Oftentimes it's best to break your buys, your sells into specific levels. The market pulse, you see this is a reversal zone. This is a critical part of the CoinWins app. So I definitely recommend guys check it out, use it to your benefit and watch the market pulse. This is critical because it gives you an idea of what the typical behavior is for each session. And as you see, the backgrounds are colored accordingly. The gray area is just that. It's a gray area. You want to be in? Possibly. These red areas or these coral areas are caution zones and these cyan areas are good reversal zones. That's what NY is about. That's why we're here right now. So let's take a look. So Sunday started the week in a false move. And typically we do get a false move within the dead gap zone or somewhere around Asia's open. We don't always get this, but when we do, it's a clear sign, especially if it's really strong like this was. You can see these vector candles dropping us down quite a bit. We see a lot of volume right here. So price then reversed for the day trade up. Now, this was a pretty long day trade. It was a good 2 days. As you see, this is all of Asia, UK, US. Then there's Asia again, UK, and now US is reversing this trade as we speak. So what we anticipate throughout the week, this is very critical to note. And if we want to understand, we have to look at the market maker's objectives. Now, this comes directly from our free course in the school communities. Join. It's in the link in the description. Okay. So we have to understand what the market maker's objectives are. Okay. There's a lot of money coming in from huge players and they have intentions. They want to hit your stop loss. They want to make some type of panic and fear to make you irrational. They want to induce retail traders to take positions. So that's oftentimes when we see price ranging, moving very slowly for days and sometimes even weeks and obviously months. The timing is really important. Okay. Now, this is very, very important to note that the time of the market maker is based on NY time. So keep that in mind. That's super critical. But there's a lot more detail here that you guys can dive into. I have a huge cheat sheet here that you can just right-click screen, download, and it's right there. Understand what these time frames are typically used for. There's no guarantee that every single session is going to play the same from Asia, UK to US and over to the weekend. However, we do anticipate that there's some type of rhyme because there is absolutely a reason. The market maker's attempt is to make trading fair in both directions. It's manipulation at its finest. We see Asia is typically moving in a 2% range. This time we had a larger than 2% range on Asia a couple of times in a row. So here, Asia started about here. The low of Asia was here, and Asia went all the way up to here. That's about 2.5%. It's a little different. So we knew off the bat, first of all, Sunday for the week open, we saw a false move, and then we saw Asia right here, all this section. Asia went as low as here, all the way up to here. That's 3%. So we knew that Asia was trending. Therefore, the UK session could do something different, and or the US session would do something different. Typically, Asia will range to build the initial high and the low of the day to set the week off, trap some liquidity above price and trap some liquidity below price. However, we didn't get a range. We started off with a decent range, as you see here, and then we moved up into a trend. So let me just draw this out. You could see Asia started with the look of what would be a range, but then it ended up breaking out into a trend. UK typically trends, so we did get exactly that in UK, and oftentimes US will reverse that move, but US didn't reverse it, which is also fine. But at the same time, US seemed to kind of range more than Asia ranged. Let's do a quick measurement of the US session of this week to see the low of US to the high of US. So US went as low as here and up to here. So US essentially did what Asia would do. US did a range of 2% while Asia trended. That's a huge, and I could say a red flag. When you see abnormalities in price action during specific sessions, you ask yourself, do I want to enter the trade or do I want to stay on the sidelines? So we got our 2% range for Asia, which didn't occur. So already the week started in a strange way. Now the UK session oftentimes trends. We did get a price trend up or down. And once Asia sets the range, the UK will typically take the liquidity above or below. So what does that mean? We've got our lower level here down around here. And we've got our upper level for liquidity around here in Asia. You can clearly see that UK decided to take the upper level. Now, US ranged, which is a difference in market structure. So we have to be patient on days like this and in weeks like this. Now here, we see the dead gap zone again. We look for a move. Asia is typically going to range. Let's just check this, zoom in a little bit more. Let's find the low of Asia for this day, which was down here, to the highest point that Asia went in this day, which is up here. 2.6%. Again, Asia went beyond the norm of 2%. So we know that this is also a strange day. Now, UK typically trends in a direction. Let's look if UK trended or if it ranged. So the low of UK was somewhere around here to the peak, which was here. It was 1.5% roughly, maybe less. So also UK performed in a strange way, out of the typical session behavior for the weekdays, not including necessarily a Friday or a weekend, which we can get to. And so moving to US, which is where we are right now, the US session typically trends in price and oftentimes reversing UK's move. So let's quickly take a look. UK didn't make a move. UK ranged. So now US could do something different. But the reason why I believe this is the move for the week is because it is currently a Tuesday. And once we have the false move for the week beginning over here, which we had very clearly, three large vectors down, that looks like a strong false move, which would lead us into the day trade, or in this case, maybe a day and a half trade up into the reversal for the trend of the week. So the trend of the week appears to be, and of course, we'll get into this over time. We can't predict the future. We can just look at the system and the structure to understand what we can typically anticipate as far as it relates to patterns and a reliable source of information. We're currently in this essentially reversal window. Head over to CoinWins to see exactly this in action. Let's look at open interest as well over time. we can clearly see the market pulse is telling us that this is a US reversal zone or a US reversal window. It's an optimal trade window. Now, you guys take a look at the chart and let me know if you think this was an optimal trade window to catch a reversal. Based on the system, based on the structure, we had our false move down right here on Sunday into our day trade up over Monday and, of course, some of Tuesday. And now it's essentially the trend time for the week, not the midweek reversal. The midweek reversal is what we would anticipate a little later in the week, something maybe around Thursday, maybe Wednesday, sometimes even Friday. Because this week already started with abnormalities, I would anticipate that the midweek reversal, perhaps back to the upside, may come on a Friday because we've had a little bit of a longer day trade up. But not even just that. We actually had a very strange market structure, market session for the first day of Asia. So that was one red flag. UK trended just like normal. That's great. That's fine. US ranged. That's two red flags. So two red flags in one day. The next day we had, again, Asia trending, which is a third red flag for the week. And then we had UK ranging. That's a fourth red flag for the week. So this week's trading was not so great and maybe not so easy. I know some of us were stopped out maybe once and maybe even twice. But again, this is because the market structure from the very beginning, from the first session, was not the average. Something that's important to understand is that we're looking for three major things and what takes precedence, okay? A pattern is very important on the chart, regardless of any news information, okay? And actually news events are often used to be an excuse, used as an excuse to move price. It's not to say that price wouldn't go there without the news. Price could go up or down with or without news. Price can move in a bullish way, even in a negative environment. Price could drop even after some incredible news that makes you think that price should go up. But when there's a news event, the market maker is playing with algorithms. They're just moving the market up and down. They can use a news event to crash or pump the market just to reach a very specific level. So we don't want to get married to this idea that our fundamental research is somehow going to guide us to buying assets and being in at the right time. Not necessarily. Sometimes absolutely. So we need to look at the highs and lows. This is why when you come to CoinWins and you turn on your levels, we get to look at levels for the week. And this is very important. It's this week, this trading week, but it's also last week's action, the high and low of last week. This is pretty critical information for a few key reasons. First of all, the market maker is not always so concerned with price action from months ago. The job typically is referring to 3 to 5, 8, maybe 9 days back for day trading. We get into positions and we hold them for a day and a half or two or longer, depending on the time frame that we're entering. So a good example of that would be a longer time frame trade. You may want to open up based on the patterns on a 1-day chart or a 4-hour chart, a broader pattern that allows you to see many more, far less candles, more concentrated to see bigger levels. Additionally, on top of this, we look for very key levels. These are orders, buy orders. Where are there large clusters of buy orders? Perhaps there are some below price. Sometimes these orders can actually disappear. So we have to take this with a little bit of patience. And just as a guide, it's not necessarily the exact direction and the guaranteed landing zone of this price, but we definitely use this to understand where price is going, possibly based on where there are orders above and below. And we're looking for hundreds of Bitcoins, okay? Orders. We're not looking for small orders of 8 Bitcoins or 10 Bitcoins. We're looking for larger orders, hundreds and thousands of Bitcoin orders. And oftentimes price is going to go there. Those could be orders set by the market makers, bots. Those could be orders set by institutions. Either way, as long as price is moving in a range and giving equal opportunity to the upside and to the downside over time, the market maker is doing their job. Let's look at a couple of other key metrics that we use to analyze price to understand why we get into trades or not. One of the strongest ones is to use the open interest. We can clearly see that this has been a profitable trade to this point. Would you close the trade and take profits? Well, it's up to you and it depends on your risk profile. If I move this up, that's still roughly a 3-to-1 risk to reward ratio, as you see, 3.4. If we took profits now, it's still not the greatest trade, but it's still in profit. There's no question about it. That strong move was pretty impressive. And the timing is super important. So the pattern is very important, but the timing was also as critical because it is still Tuesday. It's an early time of the week to look for a reversal. We could get the reversal at the end of Monday or the end of Tuesday, the beginning of Tuesday. We ended up, it looks apparently that we got the reversal. Let's go back here, right in the reversal zone, which is marked out on the chart right here. The timing was absolutely perfect. And then the levels are also very important as well. This looks like the one, and we'll have to wait and see over time. But let's look at open interest. It's very important. Again, this stuff is all found in the description. For operators, you've got business and you've got excess capital, extra capital. You don't want to throw it in the market and be too aggressive. Rather, what's important is to find a system, a structure that allows you to master the patterns of the charts, to understand where the volume is and what open interest means and why that's so relevant, to also understand when timing is key. And it's always key to understand whether you should sit out, engage, or take profits, or just enter. The levels are also very critical. So we have to know where there's liquidity above and below price. Those are the three major points. Let's get into open interest and understand how this plays into this whole charting system. And you can, of course, find all of this information right here on your CoinWins chart. Very simple. It's right here, open interest. And that is this metric down here. You'll see these colored candles at the bottom of the chart. Now, I've got a really great open interest matrix that you can actually just grab. It's very critical to use. And of course, this is also found within CoinWins. You play this, you use this game. It's an educational tool. I use it every single day. It's got education. It's got guidance, it's got a structure and a system that we've created built right into this experience. So you've got the charts, you've got chapters for learning, many updates often. So I recommend using it to your advantage. Take it and join us. Avoid risk, avoid significant loss. We can understand what's happening behind the scenes when we look at open interest. We want to look at price, whether it's pulling back or consolidating. It's important to also understand that a pullback in price doesn't necessarily mean the price is going down, because if the price is going up in a trend for several days and it starts to go down, that is a pullback, sure. But if price is already going down and price starts to move up, then the up move is the pullback or is the retracement. So this word retrace does not necessarily mean a negative thing. It just means going in the opposite direction of the trend. And then we look at open interest. Is it increasing? Is it decreasing or flat, or is it increasing in various, as you see, these conditions? Look at the price, look at the open interest. And then we start to understand what it means in those cases. And this is great because sometimes we don't understand what's actually happening. We see open interest moving flat, like in this zone, and price is moving nowhere. Open interest is kind of decreasing, as a matter of fact, as you see down here, and price is kind of just ranging, as you see up here. So if we look at this, and we can't figure it out, then you just don't take a trade. You just understand that the market maker is setting up positions for the next session, whether it be the UK session or the US session, as an example. If price is consolidating sideways and open interest is either decreasing or flat, we can see that this is suggesting that there's interest fading. There's low conviction. Liquidity is thin. There aren't many people taking trades. What could we expect? We can expect a stop hunt. Maybe the price fakes out up and then goes down. Maybe the price fakes down and then goes up, because the market maker needs to build positions and needs to essentially liquidate somebody, get some hype, some excitement, some fear in the market. So what we want to watch for in those cases is a false break. Price goes up quickly and then sharply reverses, or price drops quickly and then sharply reverses to the upside. So let's see if this played out in this section. And it wasn't very sharp necessarily, but it essentially did play out. The open interest dropped right here. That's a sign that people got liquidated. When open interest drops, you see that right there. Traders lost their money. Their stop losses were hit because they were likely going short. Okay, so price spiked up here. You see the open interest drop really sharply. that was a sign that people were liquidated. They were thinking price was going short. They got induced into this position thinking price was going to go down, which I did too. It's just it was delayed another whole day or half day. But this is a telltale sign that people are liquidated right here. Price moved up sharply and there's a huge drop in open interest. So in some way, we did actually see this exact move play out. Interest was flat. Price was moving sideways. Eventually a stop hunt came and it was a false breakout. So it broke to the upside and it still kept going up. This was a very strange week, but price still kept going up even after it broke to the upside, but it washed out a lot of traders. So it could still range again, as we see with open interest down here. Open interest started to range again. Price is ranging. So you can grab that, like I said, right in the class room of the school community that's linked in the description, pinned. We welcome you to the group. Grab this open interest matrix. But at the same time, you could simply just jump in and use CoinWins and actually get that exact information also in real time right here. CoinWins, it is an app that anybody can join at this time. But if you join us through the school link, you will get lifetime access and you will actually have a tactical edge. All right. Join us.